Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a real estate investor, advisor, and coach, as well as the founder of Streamlined Properties and the team leader of Streamlined Properties on Market, brokered by eXp Realty. Whether you are looking to start from scratch, get to the next level, or just a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
It's go time. You need to get ready for David Toupin, episode 28 of Zen and the Art of Real Estate Investing. David is the founder of Real Estate Lab, and if you don't know what that is, look it up, and you're going to find out how he went from 12 to 96 units. Those were his first three deals. Did you hear that? 12, and then 96, and the party kept going from there. I can't wait for you to hear the show, but before we get to that, I just want to remind you, and I'm sorry that I have to do it, but as we go through this podcast adventure, the thing that really helps us, if you go up on Apple Podcasts, click the plus button, subscribe to the podcast so that it always shows up every week so you don't miss an episode. Wednesday mornings, early, you're going to get that new episode. I really appreciate it. Now get ready for David Toupin. This is episode 28 of Zen and the Art of Real Estate Investing with my guest, David Toupin. David, welcome to the show. It's great to meet you.
Nice to meet you too. Thank you for having me.
Yeah, absolutely. I'm going to just read your bio in, and then I want to get right into it because I've been following Real Estate Lab for a while and I want to talk about it, but of course, get your background as well. So David's a serial entrepreneur and real estate investor. In only 6 years, he acquired over 100 million in multifamily real estate assets, and he made a name for himself as an analysis, right? This is how you got into it with Real Estate Lab. So David created one of the most widely used multifamily analysis tools, starting off with Excel. And now everybody is really into it. We're going to talk about that. It's great to have you. And how did you get started? Because I think you got started in investing when you were just 19, right?
Yeah, I was in college and I did a couple stints in like internships, financial stuff, investment banking, where you're pretty much all day in Excel. And so I really wanted to start my own business. Real estate made sense. I'd gotten interested in real estate and it just clicked for me because real estate is a very numbers-oriented business. So having the Excel skills helped. And I bought a 12 unit, was my first deal when I was right around 20 years old, and just kept going from there.
That's a big undertaking. How did you decide, or was it something that fell in your lap to go so big so quickly?
I first thought that, like a lot of people, like you have to do single family first, then you can get into multifamily. So I did a couple of wholesale deals, early 2016, but I just decided really quickly, that's not what I want to be doing. It's not rocket science going by apartments. It just takes a different skill set. And like anything, all you got to do is do it once and then you'll figure it out. So I just dove head first and learned the hard way, but it was a good experience. I'm glad I did it that way.
Awesome. We'll get some info on that deal. But when you were in high school, did you have an interest in real estate, or was it something that you fell into while you were crunching numbers and talking about banking?
Yeah, it was something I got into more in college. My first year of college, it was pre-dental was the program I was in. So a big 180 switch over to finance after that. And I didn't really want to finish, but I finished my degree and I'd already started my business by the time I was my junior year. Got the degree to please the parents type of deal, but it is what it is. Instead of going to class, I was making deals.
Yeah, I'm going to wrap Real Estate Lab into how you got your first deal. But first, tell us a little bit about what it is, and then I'll ask how you got started with it.
Yeah, so Real Estate Lab is a software company I founded about 2 years ago. So after I'd already been in real estate for a couple of years. And it was based off of the demand I saw for the original spreadsheet I built to underwrite multifamily properties. So I started really simple as a spreadsheet for underwriting like small multifamily deals, and the more different types of deals that I did, syndications, joint ventures, different types of financing, all the different things I learned doing my first 4, 5, 6 deals, I built this spreadsheet to be pretty robust, but not too overcomplicated to the point where it really could work for any type of multifamily deal. And I threw it up on my website. And in the first year, like word of mouth, I had $100,000 worth of revenue selling a spreadsheet with no overhead.
Yeah.
And so I was like, man, there's just got to be something better I can do than this, right? And it's going to take some time to build, but I think something with software, a software application could add a lot more to the experience in automating the process and providing data for users and just making it better. So Real Estate Lab was founded, I think in like early 2020 or late 2020 with the goal of creating an acquisitions platform for investors that are actively buying deals. So you can underwrite deals on the platform. You can upload a rent roll. It'll read the rent roll, put that data into the spreadsheet for you. Same thing with the T12. We provide public record data on properties people are underwriting. Really, we're just trying to make that process easier for owners and investors to underwrite more deals. Eventually, we're going to get into different parts of the process too, financing and whatnot. But for now, we focus on the acquisition side.
Yeah, so it is something that you can really do bulk analysis pretty quickly, right? I think that's what I remember about it, which help people active in terms of their outbound marketing. They can throw a bunch of stuff in and just see which ones rise to the top, right?
Exactly. Well, and I've been using it myself. We use it in my business for the past 2 years as we've been building it from our beta product to now we're fully launched this month, actually, which is really cool, January 23. Mm-hmm. So yeah, it's been cool. Like I use it and every time I find something that I want to tweak, we'll tell the software team to add new features. We'll take a lot of feedback from our current users and it's just kind of evolved over time into what it is now. And we still got a long way to go, but it's a cool, really cool application.
Did you originally start doing it to help yourself and then realize, like what you said when you put it on the website, oh, wait, people are into this. I need to build this out more.
Yeah, I never intended to sell it. That was just I had people at first, they saw my spreadsheet, like bankers and stuff. And they're like, when I was submitting for getting a loan and they're like, oh, this is a really cool spreadsheet. And friends asked me like, oh, I hear you've got the spreadsheet. So I'd send it out. And then I was like, man, I should make money off this. So I put it up on my site for $250. And then was just selling hundreds of them. So
that's interesting though, because I feel like it does make sense for the loan holders if they see someone like, oh, wow, this kid's got this thing really organized. I wish everybody came in like this. Exactly. So it can help them too to be able to plug in the numbers like that.
Exactly.
Okay, so yeah, let's go back to the 12plex. Where was it, and what was the like impetus to get it? Where did you find the deal since you were new at the time? Were you wholesaling, and how did you get it?
Yeah, so my first deal I ever put under contract was a 40 unit with a broker and didn't work out, went under contract, did due diligence, didn't feel comfortable with the amount of work at that price. So ended up pulling out of that deal. With the same broker, we got that 12 unit under contract. So I was basically just browsing broker deals online. This is back in early 2017, late 2016. Cap rates were a little higher. It wasn't as much competition. Yeah. So we were just hitting on market deals, making a lot of offers, and got an offer accepted on this 12 unit. It was in Garden City, Michigan. It's a C-class market, I'd say, outside of Detroit. And not too much special about it, but it's a decent little rental market. And the numbers made sense on the underwriting. So pulled the trigger, only had to raise like 150, 200,000, which at the time seemed like something I'd never be able to do. That was very difficult. Right. Now it's a quick one text away. It was just interesting kind of that process of, hey, I've never done this before, but I want your money to help you make money. And how are you going to do that? And explaining that. So it was interesting.
Yeah, that's exactly where I want to go. How did you, because I do think the more experience you get, then people see you have a track record. It's easy for them to put money in. But in the beginning, how were you able to sell other people to put money into the deal knowing it was your first deal?
Yeah, I just had to really stick to the fundamentals of the deal itself, as opposed to now where it's like I was raising $900,000 on a deal in South Texas, and I got a DM from a guy on Instagram that I've been talking to for a while, and he invested $700,000 the next week from Instagram. So it's at first it was like cold call a bunch of people, ask for referrals, go to networking meetups, talk to all the house flippers I knew, and say, hey, do you have an extra $25,000 sitting around that I could put in this deal to make you some money? It was a grind. So staying committed to the fundamentals of the deal. Okay, I'm buying it for this much. I'm going to raise the rents by $75 to $100 by putting in $65,000, $70,000 into the deal. A small deal at the time was $550 was the purchase price. Wow. And just staying true to those for 12. Yeah, so it was like, I don't know, 40, 45 a door. So just staying true to the numbers and the logic behind it is how I had to sell it, because I couldn't rely at all on my track record. There was none. And My age made it even harder. So just ignoring those facts and really focusing on, hey, this is a good property. You're going to want to be involved in this because we're buying it at a good price and the numbers make sense. And so I just stayed focused on the facts.
Yeah, and even though this was before you created the software, I tend to think, since you're a spreadsheet guy like me, you had it all lined up. So it was easier for someone to be able to look at it and say, oh, you've actually thought of all the scenarios. That makes it, I think, easier to pitch a deal, even as new and young as you were at the time.
I had the spreadsheets, built out the pro formas, but I actually made a lot of mistakes on that first deal or two. And the biggest one was I didn't package it right. Whereas now we have an offering memorandum with pictures and deal structure, org charts, bios of our team, and the numbers. I basically put a Dropbox link together. I threw my underwriting into it. I threw some photos into a folder. I threw like another 1-page summary on our plan. And it was all just 10 documents in this folder that I expected investors to go through. And I sent it out to a bunch of people and nobody looked at it. I'm like, why is nobody looking at it? Because it's not easy for them to digest the information. They're not an investor. They're not going to look through this whole link. So from that, I learned, okay, I lost the first 40 people I just talked to. Go back, put a nice package together, one document, email it over, make it super easy for people to digest the information. Boom, got my first investor lined up. So that was, nobody taught me back then how to do it right and wrong. So I just I would stumble every time, but
so now it's still a multi-page document, but it's more like a deck, like a startup deck, as opposed to pitch just deck. Different things. I think for people in the startup world, they know what a pitch deck is. And I look at that for everybody who's doing syndication sends me a pitch deck, and I like it because it really, you can follow through the trajectory of where your money's going to go. And there's not really anything missing if you do it right. So it's almost the thing, you know, how people always tell us as investors, like how to close. If you don't have any objections, why wouldn't we just close the deal now? I think a good pitch deck does that. You get to the end. You don't really have to make the ask. It's all in there, right?
Correct. You need a nice looking professional pitch deck. It's not too long. I like to keep ours 10 to 15 max pages. And something that just makes it real easy for people to get on board. And then after that, it's very trust and relationship based, because I would say 75% of people that invest in my deals today don't even read through those things. It's all based on trust and past performance. And a lot of them, we tell them, look through everything, but a lot of them are like, hey, I trust you. And they see how it goes. And some people comb through it with binoculars, but
we'll work because I mean, the combers sometimes can help you figure out something that you missed instead of people looking for a problem. They're looking for this to help out, especially if you're trying to be collaborative on the deal.
I've had some combers that seem, I like that term, that seem maybe a little bit more of a headache at the time, but I'm always patient with them because everybody starts at a different place. It doesn't matter if you have 0 questions or 20 questions, I'll answer them all. And I've had some of those people become some of my greatest investors, and now they don't ask any questions. They're like, I trust you. Text me every time you got a deal and I'm good for 100K. And so it's cool.
I think it's a good challenge. I think if we think that our deck is perfect or that we didn't miss anything, then we're probably missing something.
You're probably
to have
missing
somebody
something.
else, you need a couple people to really say, are you sure about this? And then you go back on it. No, you're right again. So where did you go after the 12plex? And how did you manage that to start? Did you hire property management or did you try to do it yourself at the time?
Self-management. Yeah, we self-managed it. Didn't take a management fee. We just did it. Had a leasing agent and some part-time maintenance. I didn't do like a lot of the work myself, although 1 or 2 units we were short on budget. I actually was in there painting. I got a little bit hands-on, but nothing too crazy, and just self-managed it through the process. Sold it about 16 months later.
So what was the value add that you did on that? Because I think for people who are looking, have a couple investments and they're looking to go into that 8+ space, the value add's where it's at. So you can do the value add and get the rents. But when you bought it and there were 12 units, how many were occupied?
We had, I think, full occupancy on both, maybe 1 vacant, 2 vacant. And the value add was going in. We didn't even have a formal renovation program we did. It was more like, these units are in really bad shape, so we just need to fix a lot of stuff to get them rent ready on a turn. People have been living in just really bad units, unfortunately. And so we did that. New signage, new landscaping, trimmed some trees, painted the common areas. It's really simple. I didn't even budget enough to do all the renovations. So the $20,000 acquisition fee I got, I actually had to put back into the deal. So I'm like a broke college kid, and I get my first $20,000 check, and I'm like, damn it, I got to put it right back in. So I threw it right back in the deal because I had to. And again, just part of the process. Never under budget.
Yeah, for sure. I always over budget on purpose and then hopefully just get like quasi windfall from being smart like that. But
So,
on the changeover for that, or even talking about future deals, did you do full renovations after? Or was it like the type of C property where it's like you did enough repairs, so like we're just going to keep doing repairs until we overhaul more, or sell like you sold after 16 months?
that property specifically?
Yeah, sure.
No, we just kept maintaining the units and did very minor renovations and brought the rents up. It wasn't an area where I think the rents were like $590 to $600. We brought them up to $700, maybe $725.
Oh,
but it wasn't an area
for just
where
fix it.
Yeah, it wasn't bad. It was just bringing them up to market, but it wasn't a market where I could do like new cabinets, new flooring, countertops, and then bring it up to 800. So we just brought it up to where the market was at and didn't push it on that one.
That's pretty smart, though. It's savvy to be on your first deal with so many units and know not to bite off too much, because I do think that people can buy a C and want it to be a B, but it doesn't exist in a B.
Correct.
So like you said, you can go for upgraded cabinets. It's not going to get you more rent because it's still in the C area generally.
Correct.
Yeah. Oh, so where did you go after the 12-plex?
So actually, a week after I put that 12 unit under contract, I put another 12 unit under contract from a different broker, but on the exact same street, 2 blocks away. So
that's smart too.
Yeah, I bought both those at pretty much the same time, similar business plan. So they're very similar deals, practically the same price too. And then after that, I bought a 96 unit in late 2017.
Well, and is the 96 in Michigan also? Yeah.
Yep. It's in a city called Southfield on the north side of that city, which is a decent part of town. Say more of a B area. And I took that property from like a C- property, bought it from a guy who's the original owner and builder. He owned it for about 45 years. I got it off a mailer, and he owned over $1 billion in real estate all on his own. And we just got along really well. And
a mailer on a 96 unit is pretty crazy.
It is. And I've done bigger units on mailers than that too, which is crazy. A couple of them. So mailers work. That was the first one on a mailer, and we just connected well. And I was like, hey, if you give me a shot, I won't disappoint. I'll get it done. And he sold it to me for less than other offers he had because of the relationship. And I think he was just throwing me a bone, to be honest. For anyone out there who's young and hungry, like, people will do that, when they're in this guy's position.
Yeah, I agree. I think relationships are everything. And I do think that if he has that many assets, he has assets to spare. And if it's like a fair enough deal for him, he's probably making plenty on it. So to give it over to someone, I think that's great. But like you said, you really have to build that relationship out. I think some new investors are too hardline on the calls. Hey, do you want to sell quick for cash? So you don't even have any cash. So, you have to figure out what the right thing is and figure out what they really want. That person specifically, $1 billion in assets, free and clear on 96 units, doesn't need quick cash. He wants to deliver it to somebody like you who wants to do what he did. Yeah, that's really awesome.
He just wanted to move it into something newer and nicer. And I asked him, we sat down after we completed the transaction, which was a headache. It took me 5 months to raise the money, $1.7 million, extremely difficult. And I asked him, I said, why'd you sell it to me? And why'd you take less than what you could have gotten? We bought it for $4.3 million. You probably could have gotten $5 million. And he's, to be honest, I just liked you, and I didn't really need the extra couple $100,000. He said, it doesn't matter. And this guy's a billionaire. He's one of the wealthiest people out there in Detroit, other than the automotive families. And he's one of the biggest real estate players in the Midwest. And it just was a happenstance and luck, and just the stars aligned and it worked out.
So you did have 2 12s at that time. So how did you go about raising that much capital? Because you're still young at the time, but you at least had started a trajectory. But that's a lot. It's a lot to raise. How did you do it at that time? Because that's deal 3. It's all blur. That was by far, out of everything I've dealt with to date, the hardest thing I've ever had to do in my life. And it was morning till night, 5 months of just hundreds of people. Whatever I could do, door knock, cold call. I went to every event, every meetup in the area, even if it wasn't real estate related, just asking people randomly, do you want to invest in real estate? And I ended up getting 26 people. I didn't even have enough for the full renovation at closing after 5 months. I still only had 1.2 or 1.3 out of the 1.7. Yeah. I had to keep raising after I closed, and it was extremely difficult. Took some grit to say the least. I mean, without the relationship, though, another seller just would have pulled out. He probably was like fine waiting because he has other
100%.
properties he can transition as well.
I would not have gotten any extensions if it was anyone else. I would have that deal put me on the map. That guy did me a huge favor, and to this day, I still thank him for that.
Yeah. I really do think there's so many important parts just in this 96 point deal for newer investors and investors trying to climb up, because you went 12, 12, 96 and you did a 96 just off a mailer. I'm sure I know, because based on what you're saying and how you mail, I know you're going to agree with this most likely. There's so many investors that own multiple properties that when you're doing mailers, you may hit on one that turns up a gold mine, like this $1 billion gold mine. You may not know it because you didn't do a full tax research on every one. But I think those are the investors who will do exactly what you want. So I've told people to look for the multiple names. Once you see two, run them all, because those people do want to help somebody. They have assets to spare, really.
Correct. 100%. And that put me on. I learned the most from that deal more than any other deal I've done to date. Also, it's just, I lived on site for 2 years in one of the units, I self-managed it. I've hired and fired my first employees, maintenance and property managers. It was 5 years ago, and I hired a maintenance guy that stayed on board with me there, and he actually still works with me to this day. 5 years later, he moved. I live in Austin now. He moved from Michigan down to Fort Worth to head up the maintenance on one of my properties. And now I moved to Austin, Texas, and is my head of maintenance. So it was just awesome. A cool overall experience, just doing that deal and living on site. I was the property manager for about 6 months. When I had to fire someone, I was leasing units. I was overseeing renovations. I've done it all, from maintenance to leasing to bookkeeping it was huge.
That's important, though. When you were living at the 96, did everybody know that you were the owner?
I didn't tell anybody.
That's what
Some people
worry
knew.
About.
Some people knew. I had a couple people knock on my door at night, but in general, I would tell people I'm the manager, and I would always blame it on the higher ups. But I was like, my boss said it's why we got to do it. But
a little easier to hide in a 96 than in a 2-family. Everyone's like, oh, it's
12.
A 2-family. They'll never know that I'm the owner.
Sure.
Like, they're going to know. You're right next door. There's only 2 options. Yeah.
Correct. Yeah. So some people knew, and it was interesting at times, but that I needed that. And that was a really great learning experience. Again, a lot of mistakes were made, but we did great. I bought it for 4.3, put 500 into it, sold it for 7 million, got a 40%. It was like a 1.7 multiple in 18 months for investors. And I made my first couple $100,000 check. And so I was fantastic. Finally I could breathe.
Yeah. And it's good though that you got through that one, because now I bet most of them seem easy, especially because you have more experience, more contacts, more avenues to get money. So did you sell the second 12 also?
Mm-hmm. Yeah, I sold all 3 of those by 2019. And then that's when I started buying down in Texas, actually, and made the move down here.
Did you plan for those to turn over so quickly, or was it just, the value is so high, I'm just going to take the money?
It was just the value. Yeah. And for me, I needed capital, right? I was living in my parents' house up until I moved into the 96 unit. And then from there, I'm like, I need to be able to breathe and not live off of $1,000 a month forever. So that was just art for the first 2 years.
So you head to Texas, and then what was your first Texas investment, and then where has it gone from there? Because I know it's gone pretty crazy.
I bought I don't remember how many units, 156 unit, and then I bought 136 unit. One was in Houston, one was in Fort Worth. I bought those both in early 2019, I believe. And then I made the move down, and then I started buying a bunch of stuff in Austin. Got a new development I'm finishing up in Austin. Some condo conversion projects, just other random apartment stuff, a bunch of self-storage. So I still buy a lot back in Michigan. I'd say it's about 60% down in Texas, 40% of my portfolio is up in Michigan now.
Yeah, but I think you knew Michigan because that's where you were, and you know where you are in Texas. I think that's important. Have you ever just invested in some place that you have no idea anything about it?
Yeah, I own a 45 unit in Batesville, Arkansas, which nobody's ever heard of. And it's 3 hours from any major city, but a really nice little college town. I have 2 partners on it. One lives not too far from it, but it was just a steal. We bought it for $40 a door, and it was worth like probably $60 a door right when we bought it. And I was like, all right, I'm in. So I signed on the loan and just KP'd it for them. And I haven't even been to that asset to date, but it's performing really well. And then I've got another one in Atlanta, but I don't really do anything else nowadays. I pretty much stick to my markets, which is the suburbs of Detroit and out here in Austin.
Yeah, where do you think the Austin market's going right now? Because it got so exploded, but there's still so much growth. I've only actually been to Austin once. I have family there, but it's one of those cities that's always on all the lists for everything, and everybody wants to be there, move there. What's it like being there? And where, like, if a new investor says, should I invest in Austin now? Said somebody new, can they even get in?
I think if you're long-term, you could buy anything and do well on it. It doesn't matter what you buy. If you're a 10, 20-year investor, no matter what you buy, you'll do well here. If you're like me and some deals you hold, some deals you want to flip or whatever the case value add, it's really hard to find good properties to buy. And everything they say is true. The growth here is astronomical. Like everywhere, though, last year before the rates started creeping up, not even creeping up, before the rates doubled, we had obviously this crazy peak, which I think everywhere was peaked. And since then, we've come down from that peak, 10, 15%, maybe more, and which I think is normal, but we're still 2x from where we were 3 years ago, even though we've come down from that peak. The peak was wild. I bought my own personal home for $650 a little over 2 years ago. It was August of 2020, and I just sold it 3 months ago for $1.2 million. I doubled it in 2 years, and I was like, I'm getting out because everything's going down now. But that's the growth we saw. Prices literally doubled everywhere, everything.
Yeah, but I think you're doing something that's so smart is you're always selling when the numbers are right, which is something I've always done for 30 years. Like people get a little bit too emotionally attached to houses, especially personal residence. And I feel like if you just detach a little bit, you can always make the next one just as nice or nicer.
Or better.
Usually, you make so much money, you make the next one better. But I did that same thing in Florida. Like a lot of my best investments were just houses that I lived in because I bought right at the right time and then sold at the right time.
Correct.
Yeah.
I think it's smart. It's easy to get emotional over your house, and that was tough for me to move. But at the same time, I turned $170,000 down payment into almost $600,000 in under 2 years. And that would be silly of me to not take that when the market's declining, because now I'm going to take 500, 600, and I'm going to go double that again in the next 2 years.
Exactly.
I couldn't do that in that house. It was just sitting there. For me, it's all just what is going to keep growing my balance sheet and my cash flow. And I hold maybe 1 out of every 5 properties that I buy as a long-term hold. The other 4 I flip for cash, that the one that I buy, I could have a majority, if not all the ownership in. Because everything else that has partners is that they're going to want their money out within a certain period of time.
Right. That's an important point, though. When you're taking a bunch of people's extra money, like when you're looking at 100 units or more, there's a lot of people in there. They want to get compensated back quicker. So normally, what's your normal flip time for that type of 100 units? How long do you end up holding them? Is it like 18 months? That sounds like that was around 2 to 3 years max.
Yeah, 2 to 3 years. However I can get the best return in the shortest time frame for investors if I'm flipping. And then the joint venture, I do a lot of joint ventures now as opposed to syndications. And those for me are more long-term holds or strategic 1031s. So I'll raise $1 to $2 million on a $3-4 million property, and I'll buy it with the intent of refinancing and holding it, or selling it with that partner and continuing to 1031. But just fewer partners, and then also syndicate bigger stuff where I need $3-4 million plus. But I actually prefer I'd rather do a 20 or 30 unit with one partner than a 150 unit with 20 partners.
Yeah. Less people, the better, I think, always. But it seems like you've done enough now where you know the system. So okay, we have to go big on this deal. So this is the way it's going to go. And you can manage them differently.
Correct. Just opportunistic.
Awesome.
If I find a good 20 unit, I'm going to buy it. If I find a good 200 unit, I'm going to buy it.
And so how much are you mailing now? Because I assume it's a pretty decent amount. You have a lot of contacts too, so that helps. But are you still mailing? And if so, how much?
I haven't mailed in over a year now. I got a lot of deals in the works, and every time one wraps up, I've got another one somebody brings to me where I'm like, I'm in. So it's just, fortunately, I've just had a good pipeline, but anytime I'm slow on deals, I'll start mailing up again, and I'll get some within 2-3 months normally.
Yeah. Okay, great. Today's episode is brought to you by Streamline Properties on Market, brokered by eXp Realty. That is actually my on-market real estate team. We have close to 50 real estate agents in 4 states, primarily in New Jersey and Pennsylvania. We work with traditional buyers and sellers and all investors, no matter what you're looking to do in real estate investing. We have you covered. You can get all the information you need at our website, which is www.streamlined.properties. I want to grab a couple of the questions that I sent you before. Your greatest influence in real estate and why. You said Grant Cardone. Tell us why.
Yeah, I say that. He's a funny dude, controversial. Like, sometimes you love him, sometimes you hate him. But
doesn't mean the information's not good.
Correct. Doesn't mean the information's not good. Yeah. I read the 10X rule, and I just have to give him credit because I read the 10X rule back in 2016. My goal was I want 10 single-family rentals by the time I'm 25. This is when I was 20 years old. And so it was 5 years. I read the 10X rule. I changed my goal to I want 500 multifamily units within 3 years. It was in May of 2019. And because I changed my goal, I had to change the type of property as I was looking for. So I went only multifamily. And in April of 2019, it was 2 years, 11 months later, I closed on that 136 unit. It put me up to 520 units. Because I 10X my goal. If I didn't 10X my goals, I would not have bought 500 units in that 3-year time span. And so I got to give the guy credit. It changed my life.
Yeah, I think there's a lot of books written by people who maybe everybody doesn't agree with. Even some people, if you read Rich Dad, Poor Dad, that's everybody's like original Bible.
Correct.
But some people like
Kiyosaki's like a nut job too in some ways. Like he's like awesome, but he's also an interesting dude. I think he's smart, but also a little kooky.
Yeah, you're just going to focus on what's there. Exactly. Yeah. And I think that's what people miss. They get too, same like we were saying with houses, like emotionally invested in houses. Like you can just get another one. If you're emotionally invested in somebody says something off, it's investing. Like I'm there to try to get some information and learn something. If I can take one thing and I don't love the whole thing, I'm fine with that.
Yeah, I'm just taking pieces of information where we can. We're here to get rich. We're here to make money and become wealthy. And so, take what knowledge you can. And then obviously when you've got the knowledge, pass it on to other people and help them out, because none of us could have done it without the other people around us, at least for me. And I'm just paying it forward now. Yeah.
But I think you also said, when I said collectively, how can we make real estate investing world better? You said be ethical. And I think that's important because it is shady. Like real estate investing is shady. It's no wonder why people think there's bad flippers, bad investors, because there are. There's bad agents. There's bad everything in real estate. It's very tough to navigate. But I think you've proven that if one, you have the numbers and then you build up the reputation, that it's much easier for somebody to come to you in the DMs and say, hey, I got $700,000. You can have it because I've been watching.
Correct. And I give everybody one chance. And if you lose that chance, you lose it. And I just live by doing the right thing is always the right thing. And because of that, I've never burned a bridge in a bad way unless it's something that they did. And I've got a lot of people around me that will do deals with me off a handshake because they trust me. I've got a lot of investors that'll wire me money before they even see an operating agreement. I still won't. I still tell them not to, but they want to for speed. But I'm like,
they want in.
They want in. It's just doing the right thing is always the right thing. And I live by that. And I think in the short term, maybe it's a little slower, but in the long term, you're going to stick around. Whereas people who are a little shady or unethical are always going to weed themselves out. So,
I think
don't be your own worst enemy.
Yeah, for sure. I think you proved it, though, when you said that you had your first $20,000 check on the first one, and then you decided, I'm just going to put it back into the property. That shows you that you want to do the right thing. But that's really important because somebody else is going to go try to buy a car or something, but the property is the thing that you're trying to upgrade and turn in 18 months. So you got to sink it in to get the money later. Do you think that short-term, long-term mindset is important for investors to get on that long-term? I always talk about that because I feel like short-term mindset in real estate investing can really get you burned. Not that like flipping's not good, but you still have to know that you're doing it long-term, like you said.
And I think sponsors have to understand, and Jonathan, a lot of people are going to get burned this year and next year. And unfortunately, I'm starting to hear about it. Just a lot of sponsors that put together deals where you don't really consider the fact, doesn't matter if you have one KP or you've got 7 GPs all signing on this loan together. If y'all aren't financially stable enough to be able to actually support this deal, if things go south, your investors are in trouble. And that's the unfortunate truth is there's a lot of deals that were put together with big groups of sponsors that collectively meet these on paper requirements. But what happens when you've got a 200 unit syndication with $6 million in investor capital and you've got a $50,000 mortgage a month you can't meet? Who's putting up the $20K a month to cover your expenses and mortgage?
Yeah.
Like out of pocket for an entire year. Who's got that kind of money? So, it's just made me think, like, after going through a lot of deals, and fortunately I haven't had any go south, I've seen situations where the reality is I've had, for example, I've got a construction deal that took an extra 8 months and we didn't have interest reserve. So I have to put up $125,000 to cover the mortgage payments for 6 months. We still made money on the deal, but if I didn't have that cash, I'm in trouble. The reality situation is you got to take it really seriously. It's a serious business. And that's why I don't believe in more units is better. I think if you're just getting started off, there's nothing wrong with starting with a 12 and working your way up, or a 20 or a 16 or a 32. 100 plus does not mean you're going to make more money, because it's a fact that there's a lot of people that have 400 units in their Instagram bio and their equity in those deals is less than $50,000.
That's my favorite.
That's a lot. That's my favorite. It's comical. So focus on the quality of the deal and making sure you're safe, because you grow too quick. You've heard the stories. There's so many people that go boom and bust because they grew too quick. Just think long term and be safe with what you're doing, because it's not a joke out there. Banks will call loans, investors will sue. Things can go wrong, and you just got to be careful and know what you're getting into.
With what you said about the sponsors not having the backing for the deals, do you think it's because people aren't vetting them as the deal runners well enough, or they're just like better salespeople? That's what I find with like all of the real estate investing quote gurus out there. They're really sometimes better salespeople than they are investing coaches. And then there's other people who just give away all their information for free, and that makes money. But it's interesting that what you said about the sponsors. Do you think that they're just like good marketing and there's just no backing?
I think about a scenario where you go and buy a 250 unit, $20 million property, and maybe the 2 or 3 main partners that are running the deal have a net worth of couple $1 million, but they brought somebody on that was very wealthy to cover the rest. That person was never under the expectation that they're going to have to bring money to the table. Right. That's not what they were sold on, because they never had serious conversations with real partners. When I sit my partners down, we have those kind of serious conversations as if we're, no matter what size deal we're buying. But let's say the GPs come to them and they're like, hey, we can't afford the mortgage this month because our management company ran the property into the ground and we don't have any reserves left. They're not going to want to cut the check. It's just, I'll never go to my investors for more money if I don't already have it myself. If I have it myself, I'm putting it in the deal. And it's just a different way of looking at things. We call this thing a game, this business a game, but there are times when it's not a game, and you either buck up and take care of the business or you got in over your head.
Yeah. Quick segue on that though, because when you were saying that, it just made me think of wholesaling in general. How do you feel about wholesaling in general? Because that's really the murkiest of all the parts of real estate. And it's the biggest part of the industry where I think people fake like they have money. They're holding deals for no money. So of course they're not. How do you feel about it? Have you bought from wholesalers or have you done it? And how does it fit into what in your areas?
Yeah, I've wholesaled a couple apartment deals as double closes. I wouldn't consider myself a wholesaler. I did it maybe 3 or 4 times, but they were always to friends or people I knew. It's never like I blasted it out. It's, hey, I got this under contract. I don't want to buy it. Do you want it? Type of deal. I think wholesale can be okay. Wholesale can be okay. I don't think it's all shady. I think there's some people that don't do it very ethically, especially single family homes. There's a lot of maybe elderly people that get screwed out of equity in their homes because a lot of wholesalers out there. I'm not sure I'm a fan of that quite so much, but I think in general, it's just a sales job, right? At the end of the day, you're locking something up, you're flipping it, you're getting a check, you're paying a lot of taxes. And the minute you stop wholesaling, the minute your income stops. So as a business model, I'm not quite sure I'm a fan of it myself. A lot of people make good money doing it. So
I think if wholesalers were more transparent, it would help everything on both ends with the sellers. So the sellers understand, hey, I'm going to make an extra 20 grand because I have the contacts to bring it in. That's how it's going to work, instead of like them finding out at the end.
Shady.
And then on the other end, I've always said I'm more into like wholetailing. So I'll close, do an inspection, deliver the inspection so they can just look at it. You're just going to get a better buyer on that. Like when it's no inspections or like they want money up front, earnest money that's non-refundable. That's just like silly to me. Yeah.
Agreed.
And I get a lot of wholesales now where I can't even see the property. And I'm like, why would I buy it? I'm local. I'm not looking OOS. So I'm just like, what's the point? Why they want me to be under contract before I see it. And I said, that's dumb. You're just going to keep having failed deals. It makes no sense. It's crazy.
No, I think the way you do it's smart. And I know some really good wholesalers that are transparent. They're good people, but there's a lot of shady ones too. So it's a toss up.
Yeah. Well, so when you were new though, and you were like, when you were trying to get the money, you said you were going to all the meetups, like how were you able to determine like who was trustworthy and not in the beginning? Because you were young also. So it's harder to know because someone's snowing me on this deal or not. Because older investors will try to cast off like the worst house on the newbie.
For sure.
It's great. It's great. Yeah.
I definitely got worked over and had my fair share of things like that happen, and just ignorance and not knowing and being naive. And that's just, I think, how I am, who I am today is I did go through a lot of that, having investors commit and then pull out and dealing with shady partners. I've had a couple of shady partners in the past that I've had to cut ties with. And I was just this hungry, overly confident young guy who didn't know his head from his tail and just went in. And I learned all those lessons the hard way. So I went through a lot of that, meeting people and getting screwed over or having stuff like that happen. But it's just, for me, it's all part of the process.
Yeah, for sure. Where can people find, like, if they want to invest with you, where would they go for that?
Yeah, my real estate company is called Toupin Holdings. It's toupinholdings.com is our website. And then software company is realestatelab.com.
Yeah. And in terms of I know you just said it went public. Do you have the public pricing on what it is for a real estate lab? It's a crazy product. Like, I really think people need to check this out. What's the pricing now? That. Because I think it's interesting.
Yeah, for a solo investor, it's $99 a month for the Real Estate Lab platform. And then for a business, it's $299 a month. And then you can invite your whole team to it. And it's a whole shared interface at that point.
Awesome. Yeah. And originally it was just a spreadsheet that you sold as like a one-off template for $250. I remember
exactly.
That. Yeah.
Exactly. Yeah. So now it's a subscription-based product, but it does a lot more than just a spreadsheet.
Yeah. Oh, amazing. So where do you want to be in 5 years? And then I'll follow up with our final question. What do you want your portfolio to look like? I like what you said before about doors because I agree on that. It's just, I think assets over doors and percentage of doors is what I think is more realistic. But you've done so much at this age. Where do you want to be real estate investing wise in 5 years?
Yeah. So now I've got about a $20-25 million portfolio where I'm a 50% owner or more. So that's that. I think I'd like to get that to at least 100 million next 5 years. And then I want to have at least 5,000 to 10,000 users in our software company in 5 years.
I think some people are going to check it out. That's realestatelab.com. Here's your last question though. If you have one piece of advice on what you've learned in just these, how many years? It's only been 6 years?
Almost 6 years.
That's really awesome. One piece of advice for new real estate investors that could help them have a more mindful approach to real estate investing, what would it be?
Know the numbers. Hands down. You can't go into this business willy-nilly. You've got to understand the numbers. Any property you buy, you've got to know the financial position, and you've got to model it out to see what makes sense. And I think that's the only reason I've never had a property go south and we've performed well on everything. It's just because we know the numbers and we understand that. Know the numbers. That'd be my advice.
And I'll bring up the one thing we were talking about in the pre-call though. Don't you think in order to know the numbers, you have to see the properties enough or see enough properties to be able to judge the numbers? Because to me, the numbers only make sense when you see what those numbers look like in real life. If it's 40,000 a door, you need to see what a 40,000 door looks like. So you understand if it can be an 80,000 door or it's going to be only a 50,000 door.
Yeah, there's quantitative aspects to this, which is the numbers. And then there's the qualitative side of things, which is physical inspections and getting on site. I need to have at least myself and my partners really tour the property before we buy something. And you've got to understand down to what that neighborhood's, because just because something's in a certain city does not mean, just because a property's in Atlanta doesn't mean it's a booming part of town. You could be on a bad street and 2 blocks over, you could be on a great street, and it makes the world of difference. So laying your eyes on it, going and checking out the property, seeing what condition it's in, all of that plays back into your underwriting in terms of your renovation budget and your rents.
Yeah.
100%, you're right.
Awesome, man. It was an absolute pleasure to meet you. Thanks so much for coming on the show. I'm going to link to those 2 sites in the show notes. And you're active on social as well. You have a big Instagram page, right, as well? What's the Instagram handle, just to make sure we get that?
Yeah, it's at Real Estate Jedi.
Oh, right. Yeah. Solid. All right, David. It was great to meet you. Thanks so much for coming on the show. I appreciate it.
Likewise, man. Thank you.
Yeah, this was episode 28 of Zen and the Art of Real Estate Investing with my guest, David Toupin. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.